All right, let's get you up to speed now on what the Fed is saying about the ongoing banking turmoil. The central bank's vice chair of supervision, Michael Barr, weighing in today, saying that Silicon Valley Bank was a, quote, textbook case of mismanagement. Joining us now to break it all down is Yahoo Finance reporter Jen Schonberger. Jen, nice to see you. What else are we hearing from the Fed?
Good afternoon, Dave. Great to see you as well. Tuesday morning, we will hear from the Fed's Vice Chair of Supervision, Michael Barr, for the first time on why Silicon Valley Bank failed when he testifies to the Senate Banking Committee. In testimony released earlier this afternoon, Barr says SVB's failure is, quote, a textbook case of mismanagement. He says the bank's management did not effectively manage its interest rate and liquidity risk, and that the bank suffered an unexpected run by its uninsured depositors. Quote, the bank waited too long to address its problems, and ironically, the overdue actions it finally took to strengthen its balance sheet sparked the uninsured depositor run that led to the bank's failure. The picture that has emerged thus far shows SVB had inadequate risk management and internal controls that struggled to keep pace with the growth of the bank. Now, Barr admits that regulators spotted the issues leading up to SVB's failure, but said there's certainly a gap as to why those issues weren't addressed. He says it's really up to the bank's management, not the supervisors, the regulators, to fix those issues. Now, we are also hearing from FDIC Chair Martin Gruenenberg, who will testify tomorrow before that same panel, and he will say that the FDIC will do a review of the deposit insurance system and will release a report by May 1st, including options for deposit insurance coverage levels and excess deposit insurance. He says the two bank failures also demonstrate the implication that banks with assets over $100 million can have for financial stability, and that regulation for capital, liquidity, and interest rate risk merits attention. Now, Fed speakers are also weighing in about the impact of SVB on the economy. Minneapolis Fed President Neil Kashkari said Sunday recent bank turmoil has increased the risk of a U.S. recession, but said it's unclear what that means for monetary policy. Asked on Sunday during an interview on CBS's Face the Nation if the strains could tip the country into a recession, he said it definitely brings us closer, and it's unclear how much the banking stress could lead to a credit crunch that would slow down the economy. Now, Dave, this week we're going to hear from a smattering of Fed speakers, including on Thursday, Richmond Fed President Tom Barkin, Boston's Susan Collins, followed on Friday by New York's Fed President John Williams and Fed Governors Lisa Cook and Chris Waller. Back to you.
All right, great stuff. Jen Schonberger there live for us. Thanks so much.